You are live. Go live. All right. Wow, we're still having some trouble going live on that Facebook page. All righty. No worries. We will post it later. We will post it later on our Facebook page there. Let's see. Schedule for later. I wonder why it's doing that. Oh, well. Crazy technology acting up. Technology is acting up here, guys, but the technology in our trading room here is doing just fine. Let's take a look at our account. 12%. We are up 12% in our account. This is what it's really about, right, guys? This is what it's all. This is what it's all really about. Consistent profits. It's about consistent profits. And take a look. We actually took more trades in February. Okay. So we saw less opportunity in March. Okay, big deal. It's not about how many trades you take. It's not about how many trades you take. It's the quality of the trades that you're taking. It's the quality of the trades that you're getting yourself into. And you'll never know what's going to happen. Hey, Frank, good morning. Good morning to you. Good to see you. I mean, look at this. Can we had 1, 2, 3, 4 winners in a row. And then we had 1, 2, 3, 4, 5 losses. 5 losses in a row. 3 wins in a row, 1 loss, 1 big win. Okay, get used to that. There's no pattern there. There's no pattern in the win-loss ratio, but we did win. We've got 1, 2, 3, 4, 5, 6, 7, 8. 8 wins and 1, 2, 3, 4, 5, 6 losses. Okay, so we do have more wins than losses. But more importantly, the size of the win, right? We've got these big wins and we've got these small losses, right? Small loss, big win, big win, big win, small loss, big win. That's what you have to shoot for. I was talking to a couple of people from our old school there, Online Trading Academy, last night, having some nice conversations with some new folks, and hopefully they join us. Hopefully they join us today. Here we go. We got some news on gold, right? Let's jump in here and take a look. So what do we have? What do we have here on gold? Well, we've got all this support down here, don't we? Right? We've got all this support on that full contract of gold all through here. Let's take a close look at that support. We've got the 100, the 50, the TrendCloud, and it's just consolidating, right? Let's turn this off and you can see what's going on here. Okay, here's the bird's eye view of gold. We're at an all-time high. Gold is at an all-time high, and we're pushing back up towards that market edge. Okay. Here's all the support right down here, right? There we go. All that consolidation. Support, 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 support. And now we're moving back up. So all this down here, if you add your TrendCloud to it, okay, it kind of defines it even more there, right? We are cycling up. Man, I've got fruit flies in here. That's the one bad thing about South Florida. You get lots of little bugs. So we've got all this support. We've got a lot of moving averages here, the 100, the 50. We have the actual trend cloud as support. And look what's happening. We're cycling up, right? Which means we're in an impulse phase. And we also have momentum on our side as well. So we have trend, we have momentum, and we are in an impulse phase. All three of those components working together on that 4-hour chart. Now that's a lot of force to the upside to be working with. What do we see on the middle time frame? Well, pretty much the same thing, except we are pulling back, right? So we have an uptrend, we've got momentum on our side, and on the middle time frame, we're cycling down, right? So we're in a corrective phase on the middle time frame. And where does that corrective phase want to end? Well, it wants to end somewhere. It wants to end somewhere inside of the trend cloud to make that next move up. Okay, let's box out that trend cloud. Okay, that's the first area of interest. What does it look like on the 15-minute chart here? Well, looky there. Rally, base, rally. Okay, let's box that out. Rally, base, rally. Let's make it a different color green. Let's go with that. All right, so we have now, we've got everything visual that we need for that pullback, don't we? Everything that we need for that pullback. The question is it going to pull back that far? Is it going to pull back that far? That's the question you have to ask yourself. So now this is the full contract of gold, and that looks like a really good. No, it's still pretty expensive. Okay, $350. All right, so that's a little too expensive for the. We like to keep every trade under $200, right? And we're doing very well with that. We're actually, no matter what our account size is, right? I mean, $22,000. We started with a $20,000 account at the beginning of the month. We're up 12%. Okay, $2,392.50. Is it worth increasing the risk? I mean, I guess you could, but we're doing very well with that $200 marker, right? And so if it's not broke, don't fix it. All right, let's go back here. Let's draw the same line. Let's draw that same demand zone. Okay, right there on the micro gold. And what do we get? 4? Think we can get 4 out of it? There you go. $164. Okay, that sounds much better. That is in our risk tolerance. So you see how we have to pay very close attention to risk. And when we pay close attention to risk, you get results like this. Okay. I should say end result is profit. The end result is profit. All right, so there we go. Gold is also showing up on our scanning system, right? And we are on the J contract. So it's showing up on our scanning system, GCJ. Will it pull back to this area? Let's see. Let's wait and see. Let's wait and see. Why are we allowed to take this demand zone here? Why are we allowed to take this demand zone? Well, again, it's because of the situation that we're in on those multiple time frames, right? Uptrend, uptrend, cycling up, momentum is up, pulling back. This cycle indicator on the middle time frame is simply telling us that we're pulling back into this area. Great. So what else do we see on this chart here? Let's make sure that we're using the entire TrendCloud system. Check out that ADR checkpoint. Put that ADR checkpoint up on your chart, and you can see that gold has already hit its first ADR checkpoint, and it was heading to the second one. And what did it do? It reversed. It pulled back. Okay, so we don't like to get into trades when it's already hit our ADR checkpoint because this could cause a deeper pullback. And if let's say we pull back and we enter into this trade now, well, it's already gone its full length for the day. So that means this might kind of look, it kind of might just do this all day from now on. All right. So there's no way of telling that. All right. There's no way of telling, that that's what's going to happen. But we can't predict the future. We don't have a crystal ball. And so we simply have to, we have to follow rules that are in our trade plan, and our experience shows us that this is really not the best situation, and we have to only trade the best situation, right? So let's get rid of that, and we'll just make the observation: when you want to risk your hard-earned cash, you can't just it has to be optimal. It has to be the optimal situation. I was watching this series. It's called Mind Hunter, and it's all about serial killers, and it's a great show. It's on Netflix. I don't know if you guys have ever seen it, but it's about the FBI back in the 60s, when they were developing these terms like serial killer, and the FBI didn't even have a unit specifically dedicated to, psychopaths. And so they go out and they interview these psychotic killers, and they try to figure out why they did what they did. And they found out that the reason why these psychopaths were so difficult to capture was because they only killed during optimal conditions. They practiced, right? It's a crazy show. You got to watch it. They practiced. They became professionals at their skill, and they only went for a kill when the conditions were completely optimal. Otherwise, they didn't do it. They were that obsessed with it. So you got to be kind of psychotic when you are going after your trades, and the conditions are not perfect. The conditions are not perfect. We've seen too many trades. Not work out when they already hit that ADR checkpoint. Simple as that. Simple as that. We're getting a TrendCloud signal here right now, and just to let you guys know, those of you who are new, TrendCloud signals are momentum-based signals, and the entry point is one tick above the entry signal, and the stop loss would be a few ticks below the candle that made the entry, right? Now, if we were going to take this, look where our, first major level of resistance is. So we would be entering the trade, and then we would be slamming into a major piece of resistance here. There's no asymmetrical leverage there. Look at the distance on the risk and look at the distance on the target, right? It far exceeds the target, right? Here's what 1-to-1 looks like, right? Very interesting that 1-to-1 lines up with the previous high. Okay, that's called harmonic, right? Those are harmonic levels. And what do we have before that? What do we have before that 1-to-1, right? There's 1-to-1. We've got this ADR checkpoint here, right? Water-wise, all right. That's right. Casually mentions that that's hilarious, dude. Oh, that's hilarious. Casually mentions that he enjoys watching serial killer dramas. Compares serial. Hey, we got to make it interesting, right? Water-wise, hilarious, dude. Hilarious. Oh my God. That is hilarious. Yeah. And if you ever watch the show, you could, I was a psych major, first of all. So there's your first problem, and I'm heavily into, trading futures contracts. So, when something consumes your life like that, it's like, optimal conditions. I see your point there. They interview, all these all these psychotic killers, and the answers that they get are quite interesting. So yeah, so you got to trade like a killer. Hey, I think I might use that on the on the new website or something. Trade like a psychotic killer. Only trade the best. Only trade optimal conditions when you're hunting. And these killers, they were like, yeah, when I would go out hunting, they would actually refer to themselves as hunters, and that's kind of what we're doing, right? We're kind of hunting for trades. Maybe I should have, not to scare people off, right? Water-wise, not to scare people off. Maybe I should have referred to it as like fishing, like when you're fishing, you have, a fish finder, and that's our scanning system here, right? We've got our scanning system, and the conditions are the water conditions, is there a storm coming or no? Where does this Scorpio go? Right. I'm a Scorpio and a psych major. Probably a very interesting combination there. But yeah, so that's where my head went with with that. But hey, look, water-wise, check it out. Successful. It works, baby. We started at $20,000 and we're up 12%, right? With our psychotic killer mechanism, that we put in place here. Oh man. So yeah, so keeping the trades under $200 risk really added to our profit level. Really added to our profit level. Lining up that trend and momentum across multiple time frames. Also, a big part of that TrendCloud trade plan. A big part of that TrendCloud trade plan. And just being careful. Just being careful, right? So back testing this stuff, we made all these observations, right? And there was a group of us, working on all of this. And the observations that we were making were that, when you've got that high time frame, especially the 4-hour chart, right? We all decided the 4-hour chart was the most successful. And working on that 4-hour chart and adding a modified MACD to show that momentum, right? You've got something very powerful there. So using momentum and trend together really really made a huge difference. And so we added that observation to our plan. And this is exactly what we came up with. So so for me, optimal, not really optimal condition to trade gold. So yeah, moving on. Let's check out the other metals, right? Well, let's check out. Let's stick with the metals for now. So you can see here on copper breaking down, right? We're moving down. High time frame, definitely a downtrend, running right into. Okay, we've run right into the 100 simple moving average. Being that this is a downtrend and seeing that we are cycling up, we're still in this corrective phase. Okay, so any type of upward movement is going to be short-lived, at least for now. Cycling down on the 1-hour chart, and we're also getting a TrendCloud signal. All right, we're also getting a TrendCloud signal. 15-minute chart trying to break below. So we're not quite ready yet. We've got trend on both time frames. We're just starting to cycle down. We're just starting to cycle down on the middle time frame, but we don't have momentum yet, right? We don't have that momentum component yet on our charts. Not the optimal condition, right? So as we are hunting, we are saying, the conditions are not optimal. We could take a loss, right? Man, I've got to do something. I don't know how these little gnats got in here. I'm going to be swatting at gnats during our session here. Okay. So the observation being made here, a lot of chop, right? We pull back basically into a lot of chop. This formation here, broke some structure, right? Here is structure right here, and this formation did break it right here. All right, we did break. It pulled in, broke through structure. We're retesting that area a little deeper. So, this could be setting up for some sideways movement. ADR checkpoints are way out of range, so no worries there. We just don't have momentum on our side. We've got trend, but we don't have the other components in our trade plan, do we? We don't have the other components in our trade plan. We've got some TrendCloud signals happening on the 1-hour chart, great, but we just don't have it, right? We don't have optimal conditions to trade copper. Silver, downtrend. You know, we're in transition to the upside. We've got all this upward momentum here. And we're going to be slamming into some major resistance levels on our 4-hour chart. So, again, not quite there yet. So do you see how TrendCloud is filtering everything out for us? TrendCloud is totally filtering everything out for us. And it's letting us know, hey, listen, guys, it's not the optimal conditions, right? These are not the optimal conditions that we need to be trading. Move on. Platinum. Okay, same thing. Downtrend. What is this? I mean, we've got the 50 simple is red, but the candles are green. We did get the crossover, but it looks like a bunch of sideways movement. A lot of indecision. It's not worth it. Walk away from indecision. Walk away from, if there are too many questions that you're asking yourself, like, oh, well, we've got a downtrend, so that means I can go short. But wait a second, the momentum is up, and I don't see it on the higher time frame. There's really, I don't really see a demand zone or a supply zone worth taking. Don't convince yourself that. Don't try to force a narrative. Don't try to force the narrative. Trade what you see. Just trade what you see. Don't force any kind of narrative. So that's that. All right, let's get over to the micro crude oil here. Micro crude oil. Wow, we are back to around 82 bucks. Holy moly, $82 on crude oil now. I told you it likes to go down to 70, right? And look what happened here, right down back into the 70s. I think it started right there. Back into the 70s, and bam. High time frame, 4-hour chart. Here's your TrendCloud signal on the 4-hour chart. Retested, went sideways, ripped to the upside, right? Kind of, it really makes you want to pay attention. Really makes you want to pay attention, to those 4-hour TrendCloud signals. I mean, holy cow, that's, right back around, $71 or so on crude oil. Now we're up over 82. I'm sure we're going to see gas prices. I mean, we're in a lot of trouble. But let's try to make some of that money back by trading crude oil and understanding price action, right? Let's recalculate the chart. Look at all this sideways movement here. Look at how all of this will take the latest. I mean, this whole thing really, right? This whole area here, kind of back and forth, breaks to the upside, and kind of pulls back, fakes everybody out, and then look at this classical charting pattern right here. Right? Here's a channel, right? Holy cow, there's a lot of gnats. I'm sorry, guys. I'm going to be swatting at gnats the whole time. Classical charting pattern right there, right? And then you get this breakout. Put the TrendCloud on there, and it's showing you what it's slamming into, right? Right here, here's the 100, here's the 200, pulled all the way back to the 200 and broke to the upside. pulls back to the 100, breaks to the upside, right? So you got to pay attention to those moving averages, those major levels of support and resistance, right? You pay attention to those moving averages on the high time frame, and it could really help you out with your strategy. So TrendCloud is going to show you all of that. So TrendCloud will show you all of that. So is there any move here? Can we get in on anything, on crude oil? Well, we've got our uptrend. We have our uptrend on both time frames, all three time frames actually, right? 15, 1 hour and 4 hour charts. The trend is up. The question is, where is that momentum? Because the momentum is really the other component to our trade plan that we must have. And we don't have that on the high time frame, right? And that's a really important component to have. Otherwise, you just end up, in this sideways movement. And we don't want that. We don't want that. Okay. We do have, the making here of some upward momentum, right here. See that? Right there. We are just starting to cross above positive 100 on that CCI indicator. The CCI indicator is the commodity channel index. Guys, it was specifically built for futures. The commodity channel index was specifically built for trading futures. And we love using it here, right, in TrendCloud. And here's the results, okay? Consistent profits. Did we take losses? Yeah, we did. In fact, we took 1, 2, 3, 4, 5 in a row. We took 5 losses in a row. But we have more wins than losses, which it's good, but it's not the most important thing. Most important thing is that our profits are much bigger than our losses, right? 840, 660, 490, right? 170 loss, 190 loss. We kind of messed up here, didn't we? Took a $300 loss. That kind of chipped into our profit by $100, didn't it? We don't want to take any losses over $200. Plain and simple. Guys, plain and simple. Write it into the trade plan. No losses over $200. Period. End of story. Look at the results. We're up 12%. We started with a $20,000 account at the beginning of March, and we are up 12%. $2,392.50. Okay. In February, we saw more opportunities, and we made over $4,000. We made 24% on that account in February with the very same rules that we're using here. Okay, so this is proof of our forward testing product, which is TrendCloud, right? So TrendCloud has been back tested and optimized, and now that we are forward testing it, there's the proof right there. And we're taking these trades in the live room. We're seeing these trades take place pre-market. A lot of trades take place pre-market. And there we go. Here's a really deep pullback on crude oil here. What's going on here? Let's jump over to the 5-minute chart and add the opening range breakout. And as you know, we use the 5-minute opening range on the energy market. So we'll take a look at natural gas next. Okay. So what happened here? We formed a rally-based drop inside of the opening range, and now we're breaking to the downside. Okay, all of these tools come with your TrendCloud. All of these tools come with your TrendCloud, okay? So you will have access to all of this, all right? You'll have access to all of this. If you're just starting and it's too overwhelming, just take everything off the chart like that. Maybe you want to just look at one, just look at one chart and look at one strategy, right? It's very easy to do. So when you say, okay, we're breaking out to the downside here on crude oil, start drawing some lines, right? Right here, we broke through structure. Okay, good. We like that. We've broken through the previous day's close. Okay, that's significant. What are we slamming into? We're slamming into this right here. There's a 5-minute demand zone there. Is this considered a bear trap because we're breaking out to the downside? What makes up a bear trap? Well, if you're in an uptrend and it breaks out to the the downside, then that constitutes a bear trap. Okay, so we could be trapped. Now, why are we not taking this trade? Well, we've got momentum against us here on the high time frame. That is our filter. So we're filtering out all of the best trades by saying we want trend and momentum on our side. So that's how we're filtering out these trades. This could be very short-lived. Okay. ADR checkpoints, nowhere in sight, right? We're real far away from any ADR checkpoint. That's good, right? That's really good. But to take this trade here, it's not optimal. You're going to risk your money on, on a maybe. I wouldn't, I wouldn't. If you're going to choose, the best target, if you're hunting, you want to choose the most optimal conditions, right? So we're hunting for trades here. And look at the reaction that we're getting, right? Hanging out in that 5. And remember, that's just a 5-minute. That's just a 5-minute demand zone. Look at the 15-minute demand zone is much nicer looking. That is much nicer looking there, right? That's not to say that this isn't going to work. 15-minute chart. Here's that 15-minute demand zone. That looks a lot better. As we pull back into this 15-minute demand zone, we have to make sure that we've got momentum, right, on our side. And look at what we've got here. We've got a sideways movement here on the 1-hour trend. And we do have momentum, right? We do have momentum because it is right here. Okay, that momentum is above positive 100. That momentum is above positive 100. So we have the momentum here. Wow, look at that. So we just ripped through that demand zone. Turn it gray. We just ripped through that demand zone. Would you have taken that? Would you have taken that trade? If you were just looking at one chart and you just saw a demand zone on the 5-minute chart, we've all done that. When you first start trading and you learn about supply and demand zones, all you're doing is looking for supply and demand zones, and you're taking trades without looking at, the higher time frames. That was the biggest mistake. That was the biggest mistake that I made. That was the biggest mistake that I made when I first started, is just looking at one chart and not looking at multiple time frames. Why? Why didn't I? Why? Because it's hard. It's hard. I had other day. There's always a new TrendCloud member that says, "Wow, it's difficult to look at all these different time frames." Yep, yeah, it is, but it's going to give you the most information, and you will become consistently profitable when you know how to read multiple time frames. So yeah, so people, I do hear people write me emails and they're like, "Hey, I'm doing great. I love all the videos. It's just really difficult to look at everything all at once." So the best thing that you guys can do is break it down, the way I've been doing it here. You can just look at one time frame, right? Look at your lowest time frame, draw out some, demand zones, and then start saying, okay, so here we are. Here's the opening range. Let's let it calculate and go back on the chart. Oh, come on, opening range. Opening range is up here. So we broke to the downside. Okay. We broke to the downside and we're heading towards this demand zone here. Heading towards this demand zone. Do we take this demand zone? Well, what do we need to take the demand zone? We need an uptrend. Okay, good. We have that. We've got that middle time frame momentum. Good. We have that. Uptrend on the high time frame. But we're cycling down and momentum is down on the high time frame. So, we've got this going against us here. Tim, all right, putting in an order at 89 on the 60-minute. 89. $89? Are you talking about crude oil, Tim? 89. Oh, 80. A nice whole number. Tim wants to go long at $80. So $80. That's all right. 81.99. Yeah, 81.99. Let's see, 81.99. Well, okay. So if that's what you want to do, 81.99. So you want to go long at 81.99, Tim, or you want to go short there? What? Right, I hear you. Okay, so we've got an ADR checkpoint right at 80.78. We've got, what's that? We've got the previous day's open, 80.86. All right. But look at this, Tim. By the time you get all the way down here, right? Just be mindful, trend and momentum will be against you, right? Now we're just starting to hit. So the highest time frame, right? The highest time frame is cycling down. Momentum is down. Okay, we're running into this demand zone here. We're getting a nice pop out of that demand zone, that 15-minute demand zone. And the conditions, okay, crude oil is coming up, on our scanner, right, to go long, right? And we're looking for some excuse to go long, right? So you want to make sure that you want to make sure, Tim, that these conditions, right? Trend and momentum always have to be on your side to take one of those supply or demand zones, right? And we want to make sure that that's a component of our trade. So we kind of have it here on the middle time frame, right? We kind of have it here on the middle time frame. We just don't have it on the high time frame. So if you do wait, 80.99 is right here. 80.99 is right here. That is inside of the 1 hour. Oh, and you were looking at the, so Tim wants to go long, right inside of this consolidation here. So let's take a look at that. Okay. I can understand why, there's a lot of buyers in here. That's for sure. Right. So we've got that. We've got this drop base rally here on the 1 hour chart. And if you wanted to tighten it up and use the body of the candle, you can do that. Okay, so let's get rid of all this. Well, let's get rid of that. Consolidating up here, right? Look what's going to happen if we do break down to here. Today, I'm saying today, right? If we break down, we're right here right now. If we break through all this structure, right? We break through all this structure. We're breaking through a demand zone. We could get something like this, right? If we do something like this, that could give us a lot of force. That could give us a lot of force to the downside. When we're in this situation, look at where we are in our trend. Okay, here's TrendCloud. Here's the 50 simple, right? There's your 50 simple moving average right there. And when this crosses below that 50 simple, we're going to be in the start of a new downtrend on the 1 hour chart. And you know damn well that by the time price gets down to this demand zone, that CCI indicator is going to be below. That CCI indicator is going to be below negative 100. Okay. So, so what does all this mean? It means that we've got one piece of information here that looks great. I 100 agree with you that this moving average here looks fantastic. It looks fantastic. I mean, look at that thing. That is picture perfect. Drop, base, rally, breaks out of structure. Those candles are telling us, Tim, are telling us, oh yeah, there's definitely buyers in here. There's definitely buyers in here. It's only one piece of information. And we've made this mistake before, right? I'm not saying it's not going to work because the market can do anything. The market can do anything, right? We don't know. We don't have a crystal ball. We don't know. That's why because we don't know is why we put all these pieces together, right? So we've got a great 1 hour demand zone, 100%, no doubt about it. I'm going to leave that there. In fact, I'm going to lock that on there so I don't move it. You guys know how to hit that lock, and now you won't be able to erase it or move it. I think it's really good. I think it's a solid looking zone. What we have to do, maybe what we could do, Tim, is make an observation when it hits. Maybe that might be the better way to go. What if we wait? This pulls down, right? Because at the moment that price hits this beautiful demand zone that Tim found, and that I agree 100% with, as soon as price hits this beautiful demand zone, we need to start gathering information because it is a powerful looking demand zone. So we need to start gathering information. And what do we need to start looking for? Well, we need to start looking for a reaction off of this because it's so good, right? We always want to get in, at the best time. The fact is, when price hits this demand zone, we're going to be in a very dangerous situation. We're going to be in a very dangerous situation. We're going to be against the trend. We're going to be against momentum to go long, right? If we just go long right at this proximal line here, right? Or maybe we wait until it hits that ADR checkpoint, which would be beautiful, right? If this hits here today, you will get some sort of movement out of this ADR checkpoint that's inside of this demand zone. Well, what if we drew it like this, right? Well, if we encompass this little tail here as well. You see what I'm saying? It's only one piece of information. So we'd be fighting against the trend if we took the trade right there. We'd be fighting against momentum as well on both the middle and the high time frame. Yikes. Okay. We could get ourselves into a lot of trouble. Okay. You've got a lot of force to the downside by the time price gets to this demand zone. So what should we do? Well, wow, look how far away that is. Holy moly. Look at the 15-minute chart and what we're asking this thing to do, right? We're asking it to break through this zone. You know what's going to happen, Tim? We're probably going to see, if we see something like this, break below structure, right? Now we've got some downward force in our favor. We've got some downward force in our favor. It pulls back to retest this area. Maybe we see a trend cloud signal. We see one of our trend cloud momentum signals to go short. There. Breakthrough structure. Whoa. Catch the next one. Go short again until we hit this area. Do you see how we took the information ahead of time and put it into a narrative that would fit that situation, right? So it's not a matter of that. Maybe it's not so much, oh, I can't wait for it to get down here so I can go long. You've got to be able to think through momentum and trend. As it's pulling back down to here, we go a little bit lower. We make a breakthrough here through this structure here. And now what we've got, right? Now what we've got is we've got a trade set up that's in our favor, right? So yeah, and look at the reaction that we're getting off of this little zone here. It just touched that 15-minute demand zone. It just touched that 15-minute demand zone. Okay, why is this little 15-minute demand zone working out so nicely, Tim? Why is this little 15-minute demand zone? Whoops. Let me show you why this little 15-minute demand zone is working out so nicely. Because we have trend across multiple time frames, and we've got momentum. That's right. And we've got, look at how we still have the momentum on the middle time frame. See how CCI crossed above positive 100 here? And it's just pulling back into that blue shaded area. The way this CCI indicator works, Tim, is it's got to break. We've got to see some break above positive 100. And then as long as it doesn't pull through negative 100, we're still good to go. That's how you use the CCI, right? I've got a bunch of videos on YouTube on how to use CCI. And it's also in the masterclass. Okay. So yeah, so this is valid. That CCI reading is valid. We are going against the high time frame momentum and right, momentum is down. We're cycling down in an uptrend, right? So we're in a corrective phase, right? Whenever you see an uptrend, but you're cycling down, you can bet that you're in a corrective phase. So the high time frame is still correcting. The high time frame is still correcting. So you are working against that force. But your middle time frame trend and momentum are up. So we're getting a really nice move out of this. Is it going to break structure and continue to go to the upside? We don't know. It might just retest this area up here. But we are getting a nice move out of that. So it ended up working because at least it had trend and momentum on the 1 hour chart in its favor, right? When we get down to here, we won't have any of that, will we? By the time this gets down to here and it starts hitting the previous day's open and maybe it hits that first ADR checkpoint, we won't have trend and we won't have momentum to the upside. We won't have any of that. We will only have the fact that this is a demand zone and a really nice looking demand zone. That's all we're going to have. So does that make it a higher probability trade? Sometimes it'll work, sometimes it won't work. But when you've got trend and momentum against you, oof, look out. Look out. You know, it really, here we have trend and momentum with us, and look at the reaction. We've got trend on the high time frame, trend on the middle time frame with us. Very nice. We've got momentum on the middle time frame added on top of that, even better. This would have been a trade. I would have taken this trade if we had the high time frame momentum on our side. Then I would have taken it because we're hunting for those optimal conditions. And when you do that, this is the result, Tim. Here's the result, right? Consistently profitable. Even though we took 1, 2, 3, 4, 5 losses in a row, right? Oof, boy, did that hurt. But it's a scrape on the knee, Tim. Scrape on the knee, scrape on the knee. Yeah, this was a scrape on 2 knees, right? $300. We kind of violated our rule there a little bit. No, nothing under $200, right? Do not risk more than $200 because your profit might be $700, $300, you know? So, big win, big win, big win, right? Pulled back, stopped us out for 30 bucks, right? We got risk-free in this trade. We got risk-free and it ended up pulling back, right? I would rather make $30 than lose 170, right? So you try to do that as much as possible. You try to do that as much as possible. But yeah, even though we took 5 losses in a row, looking at optimal conditions, it didn't affect us. It didn't affect our monthly profit because we have a plan that we're sticking to and a risk management plan as well that we're sticking to, right? Nothing over 200. Even on this, we're on the full contract here of crude oil. Just to show you, like, full contract of crude oil. Let's just one. Let's see what one contract here. 720. Oh, there we go. Okay. $360, but $360. Okay. $360. So we would have to take the trade. Like, what if we took the trade right at, previous day's open? You would have to do something like that. And then we bring it, right? We'd have to pull some shenanigans like that, right? But, at the same time, you can use structure, right? And say, okay, we're going to take this zone by 1. Where would we put the stop loss? We would really want to put the stop loss at least right there, right? That's $150. That's at 80.85. You're below this structure here. Again, very nice looking zone. And we've got a 15-minute demand zone inside of that 1-hour demand zone, don't we? All right, here's the 1-hour drop base rally. 1-hour drop base rally, drop it down to the 15-minute chart, and we've got this 15-minute zone in there as well. We can encompass that little tail end there, and we're below it, right? We can even, give it even a little bit more room. $190 risk. That's only the demand zone. And it's beautifully drawn out. We can see it. Look at the force, right? And what you're doing is you're looking at this. You're looking at this, aren't you? I mean, beautiful. Look at the force of that impulse. Look at the force of that impulse on that 15-minute chart. 1 minute, 1 minute, 1 hour. The 1-hour chart, right? The 1-hour chart here, same thing. Look at the force on the 1-hour chart there. There's no doubt about it that this is going to be, something's going to happen here. So I would say, if you want to be super aggressive, right, and just take that, well, you want to take a $170 risk, by all means. I don't know what's going to happen. But just, that's the thing. That's the thing. So that would be very aggressive. The more conservative way would be to watch this on the low time frame, drop down to the 5-minute chart, and what if we wait for something like this? Comes down, hits our zone, makes a nice move out of it, and then forms a lower high. Right here, whoops, here's your low, here's your higher low, right? And then breaks through structure right there. Okay? That's the pattern on the 5-minute chart. When you have a demand zone on the 1-hour chart or the 4-hour chart, and you see a really nice formation, you could be conservative with it by looking for this pattern, right? Wait for the reaction. It's not going to do, see, like our brain is telling us that it's going to do something like this. Oh, it's going to hit that and it's just going to fly out of there, right? That's what our brain is telling us, right? But it doesn't do that always, right? That's kind of far-fetched. Look for this. Watch it hit that area, and then look for the first sign of trend reversal when it hits this. The first sign. Structurally, this is what we're looking for. This is the pattern, the structural pattern that we're looking for right here. The momentum pattern would be our TrendCloud signals, right? As it pulls back, into that TrendCloud, we'll start seeing some TrendCloud signals. You can take those, wait for it to hit this first, then start looking for those TrendCloud signals. You can even set an alert, right? You can even set an alert. Go to that clock. You're on the 5-minute chart, and you can say, here's the plus sign, hit that plus sign, go to TrendCloud, up arrow right there, number 2, up entry arrow, once per bar close, oil, trend reversal. Name it. Now it'll send an alert right to your phone, Tim. It'll send the alert right to your phone, and you'll know. It might happen. This might not even happen when you're awake. That's the thing, So maybe this happens around dinner time. You're having dinner, you're watching a movie, you're watching Mind Hunter on Netflix, and then you get a signal to your phone, and you're like, oh, trend reversal's taking place. It must have hit that demand zone, right? You can even alert yourself right here. Let's do it. Let's set an alert right here at that 1-hour demand zone. Add alert. Okay. Crossing down. And we're going to call that oil demand zone. Demand zone. Save it. There you go. We got our oil demand zone signal. That'll go right to the phone. We've got our TrendCloud signal. That'll go right to the phone. We're going to be alerted to everything. We're ready. We're setting up this trade. So if you want to be aggressive, yeah, you can take it. I'm not going to do that because we're going to have a shit ton of trend and momentum against us by the time it gets down here. We're hoping that there's enough buyers in here to create this reaction. And that's what we're going to look for. Okay, but we want those optimal conditions. We want those optimal conditions because we want consistent profits, right? We want consistent profits. Swatting at fruit flies over here, guys. All right. So I'm gonna leave you guys with that. It's a little after 10. Very good lesson. Great lesson. Tim, Waterwise, Frank. Thank you so much, guys. Good. This is what makes these group meetings so valuable is when we have that participation and we get to talk about some really good stuff. So we've got a solid plan here. And that's the full contract of crude oil. If we are able to get in on that full contract somewhere, right? If we get in somewhere, if this gets made, we pick up a TrendCloud signal here somewhere, let's say, right? And we've got our risk around 180, anything under 200, right? On the full contract, if we have an opportunity to do that, holy schmoly. Whoops. Right? That's big money, guys. Especially if this goes back, back up to, that previous day's breakout. Holy cow. That's 8-1, right? Big money, big money. All right, guys. Good job, everyone. I'll see you guys tomorrow, 9 a.m. I'm going to try to get rid of these fruit flies here. These South Florida fruit flies are buzzing all over the place. And I'll see you guys tomorrow at 9 a.m. Okay, guys. Take care.